Hey guys, welcome to another weekly outlook. So I'm going to give you my perspective on some critical weekly levels to watch for on the S&P 500 moving into the week of this week, May the 20th. And so a few of you have reached out to me via email and made some requests. So I'm going to throw in a couple of bonuses and do the NASDAQ and crude oil as well. So I'm not going to do the full scope technical analysis process with you, as that can be kind of lengthy. So I've already done it here, and I've cleaned it up a bit, and I'm just going to leave you with the anchors and the targets of the week for these markets, and then I'll walk through the analysis with you. All right, so let's dive into it. First things first, we'll start off with some news for the week. So far, moving into this week, we've got a whole bunch of FOMC members speaking. And they're just going to essentially echo the same rate reduction message that they've had since May 1, or so we think. I guess we'll find out if there's any kind of variance to that. Tuesday, much of the same thing. Treasury Yellen, she's speaking at 3 a.m. Where is she at? She must be overseas somewhere. She's going to Frankfurt School. Okay, yeah, so she's over in Europe there. So, all right, so FOMC again on Tuesday. Not really any high impact news unless there's something that hits on Monday and Tuesday. So it's going to be should be fairly normal trading activity on Monday, Tuesday. Then Wednesday, you've got existing home sales, 9 a.m., crude oil inventories, 9:30. And then they release the FOMC minutes from the May 1st meeting, unless there's, again, something in the transcript that wasn't released during the meeting. Should be fairly muted, but just be on the radar for it. That will get released at 1, high impact news. And then Thursday, G7 meetings start 7:30 in the morning. Unemployment claims, and then you've got the flash manufacturing and services purchasing managers index. Those can be fairly explosive and can move price on the indices specifically pretty good. You got new home sales, nat gas, and then you got another FOMC member speaking at 2. These are all Central Standard Time, by the way. And then Friday, more G7 meetings. 7:30 in the morning, you've got some core durable goods, potential to move the markets a little bit. And then 9 a.m., you've got the revised U of M consumer sentiment at 9 a.m. That can also be pretty explosive on a Friday. So just be aware of these items and keep them on your radar throughout the course of the week, because you don't want to be caught in a position when some high volatility news impact hits. All right, let's flip over to one of my new favorite tools over the last few years is this FedWatch tool from CME. So right now rates are at 5.5. Going into June's meeting, probably no change. The discussion right now is that nothing's going to really change until September. That's when the tables start to turn a little bit. 65% chance there's going to be at least a quarter point cut. 35% chance that rates stay the same, or at bare minimum a quarter point cut. So that's to me what all of this run up here is. This is what the sell-off was here at the April 1st. And then when they flip-flopped again and then kicked the can down the road, the Fed said they were going to do rate cuts. It's just going to be September. That's when this turned into this. Okay? So we've now got 4 weeks in a row of green activity on the S&P 500 on a weekly. Not much to really look at or take away from here on this chart. Just know that we're in an uptrend. April was a fairly decent pullback, and then May has just been off to like a rocket ship since the Fed came out and kicked the can down the road for rate cuts. All right, so let's dive into, I guess, another thing to take away from here. On the weekly, as we go into this analysis, on the S&P 500, the ATR, the average true range of the week over the last 5 weeks has been 135, call it 136 points. Okay, so I baked that in as I drill down into these. So we'll go to a volume profile chart on here just to kind of walk and talk our way through this a little bit on the ES. So you've got, let's just kind of recap the week here a little bit. Monday had that gap down, rally to fill that gap down, and then Monday was essentially just a sideways back and forth day over about a 20-30 point range or whatever. And then Tuesday was that PPI report, that fake down, breakdown right off the news release, and then rallied out to an outside green day that closed way up above prior day close. And then CPI report, you had that overnight market compression right before the CPI report as usual. And then CPI rallied us up into some new value, took out the all-time high at 53.33 quarter, which was right here. And then Thursday, we rallied up to some new highs again, trapped in a whole bunch of retail fear of missing out traders up here, and then sold off on Thursday, and then grinded back and forth on Friday. And that kind of brings us up to today. So what are we really looking at here? All right, so we've got a double B or a capital B double distribution day, right? Or week, right? This is a weekly profile. All right, so what we essentially have here is accumulation down here, and then the reports launched us up here, and bankers sold off up here, correct? All right, so now we've got value has shifted from down here, 52.1275, all the way up to 53.24 and a quarter. So as we move into next week, I've got some anchors here of what, from my perspective, what kind of needs to hold if we're going to move up. So if we're going to move to that upside, and as we move to the upside here, I'm forced to be working with Fibonacci. So these targets up here are nothing more than Fibonacci. So I'm very conservative on here. The high end one, 54.28. So from current price, it's about 100 points on average weekly range of about 135. So these three targets in here for the week, target one, if we do indeed break out to the upside here, this is going to have to hold, and this will need to break, obviously. So if we break that all-time high and we do end up moving up, target 153.85, not a big spread there, and then move on up to that 54.04 and a quarter, and then 54.28 as the final target for that upside move on the week. Again, being conservative on these targets to the upside, and they are Fibonacci. So I had to pull the Fibonacci extension tool, and I used just the most immediate swing low here, swing high there, and pull back to right there. All right, so 50%, 61 and 76 to give us some targets to the upside. I just this one's a little bit too shallow to really kind of consider it a weekly target. So you got a whole bunch of value built up here, and price is going to have to clear that and stay above that, and we can't lose this. So to the downside, if we break 5,300 and we break down below there, then we're looking at that full value area retrace here down to that 52.63 level right here, which is the value area low on the week for target one. Target two is this value area high of prior week. And then the third target is 52.12 and 3/4. And that would put you from current price 53, call it 28, down to 52.14, about 112, 113 points, give or take, from that top side to that bottom side. So again, fairly conservative, but still playing on the critical anchors in the week here. So that's what we're going to be looking for. We're looking for this to hold, and we're looking for this to break. Okay, we're looking for this to break down and then shift down to here for target one. Okay, and again on here, for those of you that have seen my analysis before, keep in mind we do have a little thin print right in here that price could potentially bounce off of this top side right here, or can rip right straight through it. So just be cognizant that that is there. I didn't put it on there, but I was just cleaning up this chart a little bit. So, all right. So that is your S&P 500. 5,300 is that critical must hold level if we're moving up, and 53.24 is that critical must hold, but this one for sure needs to hold. If this breaks, then we're likely going to move down to this 52.63. So if you get a nice hard push below here, likely it is lost. Okay, on to the NQ. Essentially that same mentality, couple different nuances within the NQ. So there is this same Fibonacci extension range from up top. You got 18.887 is target 1, 18.968 is target 2, and 19.069 is target 3. The average range on the weekly was about 570 points. So again, being conservative with the move up from here, I didn't want to get too outlandish, but about 570 S&P points. I've got us down here to about 400 to that top side, 500 here to the top side here, and then again to that downside about the same. So the critical levels that must hold are this little swing low right here at 18,543. It doesn't nice. It's not a nice anchor on a round psychological level like the S&P, but essentially it's the same thing. We got a low volume node here. We've got market structure right here with a respected high and a respected low. So this swing low must hold. And this one must hold if we're going to move up to the upside. 18,650 is what I'm looking to clear and break that all-time high up here at 18,760, or this swing high up here at 18,760, 18,758. And if we break all of that, likely we're going to move up to that 50 fib, that 61, and then that 76. Same thing to the downside. If we break down here, high probability chance we're going to move down to that POC on the week, which if you notate the difference, the POC real close to shifting value up. It just didn't quite get there on the NQ for the week, but the value area is shifted right down, or the POC, the point of control on the week, is down here at 18,293, which is target 1, value area low and weekly low 18,165.50, and then that low 18,027 down here, and that one constitutes the value area high, this untested value area high down here. Okay, and also kind of sort of coincides with the weekly low of last week, which is a very tight compression week in comparison to this last week's expansion week. Okay, so that kind of does it for the NQ. Let's move over into crude. Crude oil, I'm going to go ahead and pull up the weekly chart here just to look at crude. It's a little bit different. Here is the weekly. I'm actually going to start with a daily. It kind of paints a better picture. Okay, so from right up here, 86.66, we had a sell-off from back on the beginning of April. We had this sell-off, and for the last couple of weeks, we've just been in this tight compression range, with the high being 79.42 and the low being down here at 76.23. But really the low in my book is right here, that's 77.53. So because that's where the bodies of the candles are really more or less respecting right through here. And you got a couple of wicks that have taken it down a little bit lower. But for the most part, you've been sitting in this real tight compression range here on crude that broke out on Friday. Okay, so if you see the high of this range right here, 79.47, we broke it and closed above it, which is very bullish. Okay, so now let's dip into, or drop it down to a weekly and just look at something here as well. So you have this bullish run up here. You got a little pullback, little sell off. You got some indecision here, and then you have failure to close below that indecision, and a real bullish strong push up that closed the week above here, which is very bullish. Okay, so if I'm going to be biased on anything for the week, my biases for crude is fairly bullish, that if we can hold this green level and even hold this red level right here, 78.75, we don't lose these two levels, price throughout the week. Very high probability chance we're going to come through and we're going to backfill probably all the way up even into the close of this lower body here, the close, or I'm sorry, the open of this week right here on April 26th. But as long as we can hold these levels and break this little blue level here, and we'll dig into that on a profile right now, which was the weekly high of last week. Okay, so there's that same scenario on a weekly profile. And so I've got the POC of the week's got to hold. And this little swing high right through here has got to hold as well. So this one right here, 79.43 has got to hold, and we need to break 79.65 to move up and really break out to that upside. And then you got that target 181.20, target 282.50, and then target 3 is 83.71. The average range for a week is about $4. And so if we do end up getting a big move up here, there probably is going to be a little bit of resistance through this chop right through here. But if we get a nice push to break this last week's high, likely that we move up to this lower profile, this volume, or I'm sorry, the value area high of the week of April 28th. Okay, and then we move on up to that 82.5 POC on the day, kind of coincides with that swing high. And then this swing high up here, that will put us at about that $4 range if we do indeed have that nice expansion week to the upside, as the technicals are kind of pointing it wants to do, but we got to confirm that moving into the week. Okay, so there you have it. You got your anchors for crude. You got your anchors to the high side, anchors to the low side. You got targets to the low side, targets to the high side on crude, on the NASDAQ, and on the S&P 500. So we'll follow up on these throughout the week as as price action either confirms or rejects these levels or these kinds of plays. But that's going to do it for this week. So have a great trading week, and be on the lookout for my nightly updates in your inbox. Take care, guys.